Good day, traders. Welcome to the FX Traders Edge workshop on the Bungee snapbacks. Sorry for the small delay starting, but here we all are. You are all welcome. We have a quick look at the disclaimer and move on. You will find today this webinar was originally requested by members of the FX Traders Edge community, but it was decided to open the workshop up to other interested traders. And if you're not a member of FX Traders Edge, we offer you a warm welcome. I hope you find the webinar interesting. If at the end of it you like what you see, you like what you hear, if you'd like to join our community, there is a link, and I will paste that in the webinar chat box for you, and I will also show it again at the end of the webinar, of the workshop. So welcome everyone, and we're going to start by just very simply looking to see what the bungee actually is and how it works. Very simply, it's not going to take very long. And the bungee is so named because the best way to think about it is as a cord of different strength elastic strands. Okay, there's an image of the bungee at the bottom. We have this on our charts as part of our standard setup. And these strands are pulled up and down across the channel by price action. The thickest and hardest to move, the slowest to move is the yellow, followed by the green, the blue, the red, and then the black. Okay, so small moves in price will move the black, maybe the red. Bigger moves in price will move the green and the yellow. Easy. Easy peasy. Okay. Here's an example. We have a small move in price, pulling the red and the black bungees away from the green and the blue at the bottom of the channel. They're pulling it. It's obviously a move up with price, and it's pulling these strands away. Meantime, there is a bigger move afoot, a downtrend, where the yellow bungee is being pulled by price across the channel towards the bottom. So that tells you that this is just a pullback, a retrace, a consolidation. Okay? And this snapback has a very high probability of making a new extreme for two reasons. So there's the black and the red being pulled away by this move up in price. And then price turns down again and they rejoin the blue and the green. And meanwhile, yellow is making its way across the channel. So that high probability of making a new extreme is because the stretch away was from the green and the blue. Nothing to do with the yellow, which stayed low. And if they stay low, we expect a new extreme. So if you see that situation, yeah, you're on a winner. Now, there's additional help from the fact that the yellow bungee is on its way to the bottom, so we know we're on a move down. And if we look at the chart there, we can see that price did make a new low. Here's another one. In this instance, the blue is involved in the stretch away as well. It's the next one along, next bigger one. Yeah, and you can see that the price has pulled the red, the black, and the blue away from green and yellow, which have stayed low. Once again, the snapback has a high probability of making a new low because the yellow and the green stayed low. They haven't started moving across the channel. Okay, here's the chart that goes with it. High probability of making a new low. And of course it did do. We moved up to this blue semaphore and we made a new low. Here's another one. This is slightly different. And this one is the reason why some of the FX Traders Edge members wanted the workshop, just to get it clear and in their heads what a failed snapback is. Now here, we have a stretch away of the black, red and blue away from the yellow. We also have a stretch away of the green, and the green has crossed halfway. Yeah. The green has crossed the middle of the channel, is probably heading for the upper reversal zone. Don't forget, in front of this point is the future. We only are looking up to this point here. The snapback in this instance has a high probability of failing to make a new low. It's going to be a retrace down, a correction, a consolidation down, while the green then continues its journey to the top. Okay. And the snapback here, you can see the snapback came down to this blue semaphore. It started moving back up again. It had another little snapback. And we'll see eventually how it continued to go higher. But the point is, it had a high probability of failing, and it did. With a failed snapback, it is price that fails, not the bungee. It's the fact that this move down failed to make a new extreme. It did not come right down here. Yeah, it stopped. So under these circumstances, we can see a failed snapback. Okay, now don't get too don't think this is too complicated, because it really is not. A successful snapback, as we already saw, price makes a new low. A failed one, price fails to make a new low. The failure is all to do with the bungee, the price action, sorry. The snapback on the bungee happened. Yeah, the black bungee came all the way down to the lower reversal zone. The red bungee snapped back almost there. Yeah, that was fine. It's price that failed. Now, if you do find as we go through this you've got questions, please save them for the end. I want to make sure I get through all these slides so that you've got something to refer back to in the recording. But hopefully we'll have time for question and answers at the end. Okay, so now let's look at how that bungee action fits with Elliott wave analysis. And you can see that the stretchaways line up nicely with waves 2 and 4. There might be some smaller ones in between, internal waves of a smaller cycle. Yeah. So we've got a successful snapback for a wave 3 and a successful snapback for a wave 5 and a failed snapback we get for a wave 2 or B. Well, these are only small on the way down and they're difficult to see, but once we've turned you can see the failed snapback here at the end. Okay, so we've got successful snapback, failed snapback. In each case, it starts with a stretch away, stretch away, stretch away, stretch away. This one fails. Now, the fact it's failed tells you this is going to go higher. Yeah. And it would be a wave 3 or a wave C that we're embarking on after the failed snapback. Let's see. Okay, now we've added the wavy tunnel in, and you can see how wavy tunnel trades fit with the bungee. I don't need to put the notes up. You can see, hopefully you can see without me showing you, that there is a breakout 3, that there is a breakout 3, yeah, and this one is a retrace from a price to wave and should result in a fill the gap. So now we've got the bungee reflecting price action. Yeah, we've got the bungee fitting with Elliott wave, and we've got the bungee fitting with wavy tunnel trades. Okay, now let's look at chart patterns. Yeah, here we have a stretch away and a snapback. Let me get rid of those previous. I'll do this in a different color, shall I? Blue. Okay. So here we have a snapback. There it is. Here we have a snapback to a new low, new price low. Here we have a stretch away and a snapback to a new price low. Here we have the one we looked at earlier, which failed to make a new low. And what are you seeing? Head and shoulders at the bottom, inverted head and shoulders. There's your neckline. Yeah. So the bungee's not telling you anything that Elliott wave isn't. It's not telling you anything that wavy tunnel isn't. It's not telling you anything that the head and shoulders isn't. But it helps you know, it confirms those other methods of analysis. And those that get to grips with it find it extremely useful. You need to stop and think about it. You need to look at it and almost deconstruct it and turn a blind eye to those elements that are not relevant. And then it suddenly becomes clear. It really does. Okay. So left shoulder and the head are snapbacks to a new extreme. And the right shoulder is a failed snapback. Now that failed snapback, when it turns back up, might give you an early entry into your head and shoulders, if you think about it. Yeah, normally you'd want price to cross that neckline before you went in long, but we could go in long possibly here, where all the bungees have turned back up. Red and blue have turned back up, green's turned back up, the snapback is over, it's all finished, and we've got an earlier entry than waiting for price to cross the neckline. So there are a lot of instances where the bungee gives you an early entry. Okay. So now we've got Elliott wave, wavy tunnel, the inverted head and shoulders pattern all together, and the bungee reflects what they do. Now all this, if you go back to when you very first started trading, and from somebody somewhere you will have learned about a classic 1, 2, 3 reversal. Point 1 is the extreme, then you get point 2 in the direction, then you get the correction for point 3, and when price crosses back above point 2, you've got your trade. Well, we've superimposed down the bottom here the 1, 2, 3 reversal. Wave 5 is the 1. The first move up, be it a 1 or an A, is your 2. And the failed snapback is your 3. But once again, it's exactly the same as the inverted head and shoulders. The 1, 2, 3 reversal, you get an earlier entry from the bungee. Therefore, a shorter stop. Therefore, you can afford to make a bigger trade with the same risk. Therefore, in the subsequent move, you can make more profit. So hopefully everybody's got to grips with that. Right, let's continue. Now then, the harmonics bit, because it does, obviously, all these things tell the same story. Price action drives everything. So everything we do with the wavy tunnel trades is driven by price action. It's just we know that price action follows patterns. That's what Elliott wave is all about. That's what harmonics are all about. Now, there are many, many harmonic patterns, and therefore it's very hard to find absolute nailed down correlation between harmonics and the bungee. However, if you look at the appropriate time frame, points C and D of a harmonic pattern will line up with a bungee pinch or squeeze at the end of a fractal move, and that'll have been previously you'd have had a stretch away and then a snap back to a new extreme. But one interesting point is that point B of most harmonic patterns will be a bungee stretch away. Now, we've learned about one way of identifying whether the snapback will go to a new extreme, and we've learned a way of looking as to whether it will fail. So by referring to the bungee, we can get a clue as to which harmonic pattern is developing, how far the subsequent move will go, and therefore where we expect the end of the harmonic pattern. Sorry, where we expect the end of point C of the harmonic pattern. Let's go look at some charts and see what we can see with that. Just bear with me 1 second. Yeah, let's go look at some charts. Here's a chart with some harmonics on. Okay, so we're going to look at point B. Point B, stretch away, and the green moving up across halfway. So we expect the subsequent move to fail, and it did, and go to a new extreme. Point B. Yeah, we got a stretch away. The yellow stayed high. All the others were involved in the stretch away. We expect to snap back to a new extreme. We don't expect this one to fail. And it didn't. Not only did it not fail there, but it kept going as well. Okay, this point B is a little bit different, and we got the stretch away for point A, we got the snapback, and it's almost to a new extreme. It's almost horizontal is that one. So there are always going to be some exceptions, and that might be one of them. But over here on the right, we've got a bungee stretch away for A of the harmonic, and a failed snapback for point B. So there is a correlation between the B point of nearly every harmonic pattern. Okay, nearly every harmonic pattern, and the bungee. I don't know what else we can see. Let's move forwards a bit and see if we can see it some more. Some of these where you're going sideways, you have to learn to interpret the bungee. Don't just look at the front end of it. Here we've got the yellow bungee heading to the bottom. Yeah, so we had a stretch away down for point A, point B, sorry, of this. No, that's point C, isn't it? It's got one overlaid on top of another. Do you know what? I don't want to confuse you. I'm not going to talk about that one because price action is relatively flat anyway. And as you get to grips with this, you'll learn to interpret that. I just don't want to confuse people. So this one's easy. The pink one. Price comes down. Price goes back up for a stretch away for the B, and the snapback fails. Stretch away for the B, the snapback fails because the green bungee is continuing up. Now, in this instance, we already had quite a big move anyway. This harmonic pattern is internally, it's an internal harmonic as part of this move down. So we didn't go to a new extreme. We went up to the tunnel for a breakout 4. Breakout 4, that's one of the wavy tunnel trades. Yeah, the end of a harmonic at the tunnel. Brilliant. See how all these things line up? So, what I want to do now, that's all I had prepared. I rushed this together with the intention of working through some examples then, turning this into a workshop. Yeah, and inviting you to do some on-the-fly analysis as part of this workshop and see what you've managed to get hold of. And we will answer any questions as we go along. But essentially, you now know what a stretch away looks like, if you don't refer back to the early slides, and what a failed snapback looks like and how you can predict it. Okay, so I'd like to put harmonics maybe on one side and move to a chart. It doesn't matter what chart. I'm open to suggestion. Give me a currency pair, instrument, and a time frame. Any. Put it in the chat box. The first one up, that's the one we'll go look at. Oh, so we're going. Okay, Ian, not a currency pair. We can do the US 30 daily if you want. We'll go quickly to that. Echo in and the daily. Right, so what have we got here? Let me take it off. Let's move back to a point where we don't know what's going on. Oh, look at this move up. You're going to see snapbacks aplenty during this move up. And we'll tackle them one at once. Right, we've got a stretch away here, a stretch away here. The snapback failed to make a new high because the green bungee is on its way down. The yellow bungee is still high but moving down. So we got the snapback of the red only. Look, back up to the descending yellow. Meanwhile, the green is continuing to the bottom. So the snapback makes a new extreme, which gets this green bungee to the bottom of the channel. But now look what we've got. Let me clear all that. We'll start again with the next one. Now we have a stretch away here from the yellow. The yellow is high down here. Red, blue and green of price action has pulled them away from the yellow, which has stayed above halfway. And sure enough, the snapback, this snapback, ultimately takes us to a new high. Not in that initial move. We get a retrace and we continue higher. But that retrace, yeah, forms another stretch away and a snapback to a new high. Stretch away, snapback, snapback to a new high. These are breakout three continuation trades, which we've, for those that have are members of the FX Traders Edge community, we, at the core of everything we do are the wavy tunnel trades. And the bungee, the semaphores, harmonics, Elliott wave counts, chart patterns, candlestick patterns, everything else you learn supports a wavy tunnel trade. The wavy tunnel trades have a high probability of success. And if you've got a high probability of success, well, that's all you are ever looking for in trading is a system that gives you a high probability of success. You're never going to get a system that's 100% successful, but so long as it's a high enough probability of success, you can't fail but make money. If it's 85% successful, you are guaranteed 15 losing trades every 100. but you expect that. And if you've got use your stops and do your trade management properly, your account will grow. So breakout threes, we know what breakout threes are. We know how they work. This bungee is telling you whether they're likely to succeed or not. It's a confirmation. And I love it. Absolutely love it. Look at these. Breakout three, breakout three, breakout three. Yeah. No, there's not a particular value because Warren, if you think about it, well, let's have a look. Here on the daily is a nice bungee stretch away on that marker. Yeah, and the red and the blue have gone to the extreme, the opposite extreme. The green and the yellow stayed above halfway at that point. Now, if I go down to the H4, that's going to be something completely different. Right, so I'll put it to the middle. And look, on the H4, it was a complete move across the channel of the yellow bungee. There it is. It came in three waves. You can see the green bungee came down, back up and down again, and so did the red and the blue. So all these stretchaways and snapbacks look different on different time frames. Look at that. Look at that one. That's just telling you a move back up from this extreme and a failed snapback with the blue heading for the top, but it hasn't got there yet. Well, actually what happens is we then get a failed snapback up because the red's moved. This gets quite involved here. Let me talk you through this one, because this is how you would get to see these things when you get used to looking at the bungee. Okay, so on this move up to this point here, not only do we have all the bungees moving up, but the red bungee has stretched away from the blue. Right at the top here, it's gone further and faster. So we turn down, and the red bungee then not only snaps back, but stretches away to the bottom side of the blue. So we've got a failed snap back down for the red bungee, and we need it to snap back up. So you learn to split all this, what looks like quite a chaotic mess. You learn to appreciate, and you look for the red, and everything else goes into the background, and you can focus on what's going on with the red. If you're looking for the yellow crossing the channel, it doesn't really matter what happens to all the others. You're looking for the yellow crossing the channel. Here it is going up to the top here. So your eye then begins to filter out the irrelevant part. We can't strip it down because everything's pertinent. Yeah. So no specific value. Okay. Some stretchaways will just involve the black bungee, some the black and red, some black, red and blue, some black, red, blue and green. Barnabas, it's like everything, they look different on different time frames. There's nothing special about it looking different on different time frames. Elliott wave counts, you see a wave count of a different size of cycle on different time frames. Yeah, don't forget, on a daily candle, one daily candle, we can have a lot going on the M15 chart. A lot going on. Yeah, so it looks different. It looks different. Elliott wave looks different. Within that big daily candle, any of these, there may well be wave counts on the M15 that you just can't see on the daily. And it's the same with the Bungee. Yeah, here's a little tiny, let's move this thing over. Here's a spike, let's use that one. Here's a spike down of the black and the red, a stretch away of the black and the red. Yeah, and then it snaps back up to a new extreme, as you would expect. If we go down to the H4, we don't expect it to look like that because we've got 6 times as many candles involved on the H4. So here's that little correction on the daily. On the H4, we've got a stretch away and a failed snapback, and another continuation of that stretch away, another snapback which went to a new high, I think, and then another stretch away down. If we line the daily up with the extreme, it's there. So there's a lot more detail on the lower time frame, and that's why they all look different. But that's to be expected. If you're in on an internal count of a wave 3, Elliott wave 3, if you're on an internal count, a 2 of a 3, yeah, you don't expect it to look the same as the bigger 2 that came before the 3. But you soon get to grips with it. If we move that down to an hourly, we expect the yellow to be involved in the move down. It's probably crossed the channel. Oh, I can't go that far back on the hourly. My apologies. I don't have enough candles on my chart. We'd have to do it. We have to do it somewhere else. Let's move to a different pair. New Zealand US dollar was the next one up, and we'll try and pick one near here. We'll try and pick a small move there. Small move. There is a correction up, a stretch away up here. Yellow's moving down. We expect this to snap back to a new extreme, and it did. But this stretch away only involved the black and the red. On the H4 chart, it involved the black, the red, the blue, and the green. Which all snap back down to a new low. And if we go down to the hourly, to move along a bit, here's that stretch away. Now then obviously we set this on the daily, so to just shift that to the appropriate candle. And the whole thing's moved across the channel on the hourly. Now what we do know is that if the bungee pinch is here on the hourly with all the bungees at the top, then we're going to get the same thing on the M15, the M5, the M1. Any time frame below, all the bungees are going to be at the top. When they pinch at an extreme, they must be at the extreme on all the lower time frames. We'll go down and have a look. What did I do then? Did I? There it is. M30, all at the top. Let me make sure this doesn't jump about too much. M15, all at the top. M5, all at the top. M1, and we're going to see exactly the same. It's not going to line up exactly right because this shifts, but that's the top, and all the bungees are at the top. So on the extremes, the bungee is always one side of the channel. So here on the M1, we've got a stretch away the red and the blue and the green, and it's snapped back up. Here on the M5, it's these blue semaphores. We've got a stretch away of the black and the red only, and it was only the black that snapped back up to give us the failed snapback. On the M15, you can hardly see it. It's that little one there. The black bungee came down, but not very far, and snapped back up to the descending red, blue, and green. And the higher we go, if we go to the hourly, you won't even see it. You can't even see that move. Concept is crystal clear, says Barnabas. Good. Good. So this bungee has a lot more to it than just stretchaways and snapbacks. But we are sticking with stretchaways and snapbacks on this workshop, and I am happy to keep answering questions on this for as long as you keep asking them until you get it, because it's so important. But just because there might be one or two people who have other things to do, what we'll do first is we'll have a quick look at this slide. I need to put that into the chat box for you, don't I? I promised I would do that. Bear with me a second. We will keep going. I have no intention of stopping this prematurely. We're going to keep going until you get it. Okay. So we're on the question and answers section. We're looking at our charts, and we will just keep going as long as you want me to, up to, well, for another half hour at least. Can I start small and work higher? Very difficult, Jeffrey. I do have, we can use Strategy Tester on MT4, but Strategy Tester does not let us switch time frames. You have to stick with the time frame you've got. So it's rather difficult. Pretend you don't know the future. But we could do that with Strategy Tester, couldn't we? Yeah, we can do that if you wish. So we're going to look at the Aussie, because that's on the in the Skype chat, the request. Aussie US, we're going to look at the 1 hour chart, and we've got to include April the 17th. So let's start at the end of March. And we'll go to today, why not? Right, let's put the wavy tunnel template on. So we're looking for April the 17th. Perhaps I went back a little bit far, but it won't take that long. Right, so this is the 17th coming up. Was there anything in particular? All right, failed snapback, Warren says. Okay, easy. Let's do it. I don't know what happened. I don't know if you do. I can't remember. But we can jump through to the 17th. So we have, we can see a failed snapback at the start of the 17th. We've got this stretch away down of the red, blue and green from the yellow, and the yellow has come lower. So we expect this snapback to fail on the 16th, and it's gone up here. It's failed initially, but we are expecting this to go higher. Those of you that are part of the FX Traders Edge community know why we expect this to go higher. So this is a temporary failure on the snapback. We've got to move down. We're probably going to go higher. Do you want to buy it now? Yeah, why not? It's probably going to come a little bit lower, actually. You might get a better price. No, it didn't. But we went higher. Now, those of you that are not with Wavy Tunnel, not with the FX Traders Edge, might be wondering how we knew that. Well, it's not for this webinar. Yeah, these are the things we use every day to tell us what's going to happen next. So now we've got all the bungees at the top, and one of two things can happen. We can get a market reversal and we go down, or we can get a stretch away down that snaps back up to a new extreme. Just while we do that, I just don't want to miss some of these questions. Can I comment on the importance of the time frame for the failed snapback? The failed snapback doesn't necessarily mean a reversal. Yes, Ralph, absolutely. You have to do multi-time frame analysis. What the bungee tells you on an H4 will guide you on an hourly or an M15, absolutely. And the failed snapback doesn't necessarily mean a reversal. The failed snapback, if you think about it, let me draw it on the chart. So ignore what you're seeing at the moment, just look at the blue lines. Here's a move to an extreme. Here's price coming down, that will give us a stretch away. Here's the B wave of the correction, that's a failed snapback. And then the C wave comes down and then we continue. So you're absolutely right, it doesn't mean a market reversal, it could be part of a correction. Okay? Part of a correction. But it tells you that. We'll keep going. We'll keep going. Right. So here we are. Now we've got a stretch away of the red from the green and the blue. And we expect to snap back up. But if you're a member of FX Traders Edge and you attend the regular trading rooms that we have, you will know that this move down isn't over yet. Oh, what a surprise. And it still may not be over. Oh, what a surprise. Yeah, we knew that. Now we're looking at this chart and we can see the green bungee and the yellow bungee coming down towards the middle of the channel. Now we expect any subsequent snapback to fail to make a new extreme. Let's see what happens. Spiked up, but failed to make a new extreme. Now we've made a new low. Yeah? Now we expect this to go even lower for other reasons. There it is. Excellent. Now we're happy that it can go higher. If you haven't seen this, and you're not a member of FX Traders Edge and you haven't seen this, then this must be very interesting to you. We use this day in, day out to tell us what price is likely to do next. And it's like having a crystal ball on the future. Okay, so we got another stretch away up to the wavy tunnel filter, this blue line here, and we expect this to turn, and I think it will do a failed snapback down, a tiny one, and then go up. And there it was, that tiny failed snapback down and up to a new extreme. Hey, now we're looking at an H1 chart. If you were looking at a daily chart, knowing how these things move, that little tiny correction on a daily chart would give you lots of scope for trading on a lower time frame. So now we have a snapback down. Can you see the blue and the red bungees that were involved in the stretch away have turned over? The green and the yellow are low, and this is almost a wavy tunnel trade. It's not, those that can see it will recognize it as being a wavy tunnel trade. It's not a textbook one, but it's nevertheless, it's there. And we expect this to come down below this point here. There it goes. I just love it. I just absolutely love it. Well, we can keep going with this, or you can keep asking questions. For those of you that are not members of Wavy Tunnel, here's the link to follow again if you're interested in joining us. This is not practiced. Yeah, this is not practiced. You need to appreciate that. You guys selected the currency pair, you guys selected the time frame, you guys selected the date. I had no idea where we were going, so I can't possibly have looked at this chart before it happened, before today, before now. So this, as far as we're concerned, this is almost like live. Let's keep going just for a bit. If you remember and you don't attend the trading rooms, we talk about this all day long in the FX Traders Edge trading rooms. And it doesn't matter whether you trade daily charts, 4-hour charts, or even 5-minute charts. The rules are exactly the same regardless. So another stretch away, another snapback, just kicking in, suspect we let's see, we might make a slightly higher high first, but we're coming down to a new low as it stands. Oh, the very next candle, there it goes. Little tiny stretch away of the black there. If you went down to a smaller time frame, which unfortunately Strategy Tester does not let us do, but if you went to a smaller time frame, you would see a stretch away involving the red. And if you went down 2 time frames, you probably see a stretch away involving the red, blue and green, just for that green candle there. So if you see a small stretch away, like this black one here, or this black one here, or this one we just looked at, all you have to do is go down the time frames and find one that looks more like this, or like this. It's the same move, but you're going into more detail and it's easier to spot what's going on, and you'll be able to get into your, in this case, sell to a new extreme. You'll be able to get in sooner than you would on the higher time frame. Hopefully you can all appreciate that. Right, let's just keep going. That was the snapback to the new extreme that we expected. Now we've got a stretch away going on. It isn't over yet, it's still going to go up. We've got 3 red candles, but I suspect this might go higher now. Whoa, there it goes. How did I know that? Isn't it amazing? Listen, this has nothing to do with me. I don't claim any great skills. Yeah, all I'm doing is interpreting what the chart's telling me, especially the bungee. Anybody can do it. There's nothing special about me. I'm just an ordinary trader like you guys. And like most of you, I probably blew a load of money in the first instance, thinking I knew best. And it took me, I had to do that before I realized that you had to follow rules. And the rules I follow are the wavy tunnel rules, backed up by the semaphores and the bungee. Okay, so we've got another stretch away going on. This is going to go higher before it comes down. Oh, I just missed it. I was trying to be too clever there. Sometimes, hey, listen, does that bother me? No, I foolishly preempted. Did I do it foolishly, or did I do it because I wanted to show people? I know there are at least 2 people in this room who tend to jump the gun, and you have to wait for the confirmations, and that time it didn't happen. Yeah, but even when you follow the rules, 100% follow the rules, you're not going to get it right every time. It's high probability, and that means you're guaranteed to fail every now and again. Get over it. If you can find another system that's as good, if you can find another system that's 100%, please tell me about it, because I want in. So here we are, new extreme, little stretch away. That green candle up there is giving us a stretch away of the black. It's got to go back down to a new extreme, isn't it? Until this red moves substantially higher, we expect this to come down for a new extreme. Now, obviously, price action affects the way you think. Each new candle gives a slightly different picture. It doesn't matter until you hit to the point where you want to make the trade. Failed snapback. Failed snapback. Look at that. It's all happened very quickly in one candle. This stretch away of the black and the purple snapped back down to the blue at the bottom, turned around and continued to a new high. Failed snapback. So this is where we come down for the new extreme. There. When you see these bungees moving off the bottom altogether, parallel, then you'll know that the move has turned over and it's likely to go to a new, it's likely to go higher for a deeper correction. Right, we've got a stretch away here of the red and the black, and we expect a snapback down to a new extreme. But those of us who regularly look at this know that this has got higher to go first. Oh, so it did. Those of us in the know that this has got even higher to go before it snaps back down. Oh, and it let us down. Well, amazing. These things where these don't follow the rules 100%, yeah, it doesn't always matter. It only matters if you're going to make the trade. Okay? It only matters if you're going to make the trade, and the trade is a wavy tunnel trade. And those of us looking at this area here will be able to see that on a lower time frame within that box, on a lower time frame, we've got a classic breakout 3. So on a lower time frame, we might have traded it, but not on this time frame. Same move, it's just easier to see on a lower time frame. Here we go. We think this has got higher to go. Just spiked up a bit more, yeah. Now look at the green coming above halfway. Yeah, Gregory, thank you. Green Bungee. Gregory is one of our regular members in the trading rooms, regularly making profitable trades. Yeah, and uses the bungee to back up his trading decisions. He uses other analysis and uses the bungee to back it up. So now we expect this to fail to make a new low. It's not come much above halfway, so it might make a new low. But let's just keep going. There isn't a sell yet. There still isn't a sell. Look how the red bungee's stretched away down from the blue. This may well be going higher. And the green bungee's coming higher all the time, confirming that when it eventually does turn down, it will be a failed snapback. It won't make a new low. Is that the end of the move before we go down? No, higher to go. Now it could be the end of the move. See, we knew that little extra move had to come. Now we've got the snapback. The yellow bungee stayed low. Will we make a new low? Well, I wouldn't trade it at this point, so it doesn't matter. But we're certainly coming down. We only did it in one candle. One candle, that's all. Right, so now we're going to fail to make a new low. And we caught up to date. Oh no, you'll have to watch your own charts. That's brought us up to date. I think it's the end of yesterday, sorry, on this chart. Right, I think we've made our point, haven't we? That these stretchaways and these snapbacks, once you get to grips with them, and it doesn't take a lot of doing, you just have to spend a little bit of time learning the ins and outs of it. The same as anything. You can't expect to jump in and understand it from the word go. If you were an apprentice mechanic on a Rolls-Royce car, you would not be allowed to work on a customer's car until you'd got to grips with all the rules, until you understood all the mechanics of it. You'd undergone lots of training, and only then would you be under supervision allowed to work on a customer's car. Yeah, so don't expect from day one to know everything about the bungee, but if you think about it as you're watching the chart, if you concentrate on it, it'll sink in. It really will. And it becomes second nature, as you can tell. Dorothy, no, it won't be posted where the normal trading rooms go. It'll be under special webinars, I think, but it is being recorded. I hope so. Yeah. I did remember to set it going. It is being recorded, and you will, I think Jodie will be sending a link out to members where they can go back and review it. Okay. So I'm going to call it a day there because we're just going to go over the same ground again. I want to thank everyone for being here. Yeah, here's that link again if you're not actually in a member and you're interested in learning more. Yeah, don't forget, guys, be disciplined. Be patient. Wait for the market to come to you. It's all about ambush. Yeah, wait for the market to come to you. Have fun. Yeah, enjoy it. It is fun. And I'll see you in the trading rooms tomorrow for the London room, tomorrow for the New York room. Thanks a lot, guys. We're going to close the workshop now. Good, Gurda. I'm glad it helped you. I'm glad it cleared things up for you. There will be others. Yeah. And our next workshop, I think Jodie's agreed. We've had quite a number of questions concerning divergence. There are still one or two people who are a little bit confused with divergence. So the next special webinar that we're involved with will do that. It should be a short one because divergence is dead simple, and it won't take long to get that message across, but that's probably the next one we'll do. Okay, guys, we gotta go. Thank you, everybody. See you all later. We're going to close the show. Bye.